name is Scott Craig. I'm a specialist VAT partner and a member of the Azets National Indirect Tax team. In this presentation, I'm going to provide a summary of all the indirect tax changes that were announced in the Spring Budget 2023. For the avoidance of doubt, I'm going to cover the key announcements made on VAT and customs duty. Now, it's fair to say that VAT and duty continue to provide challenges for UK businesses. VAT continues to be a subject of refinements and change, and in some cases the rules and procedures are still subject to unhelpful interpretation and change. Brexit, on the other hand, has resulted in customs duty and import and export procedures changing. These have become more of a burden and in some cases a cost for UK and overseas businesses. With that in mind, it was hoped that the budget could bring some good news, some clarification of uncertain areas, simplification of procedures, savings, even benefits. This should all be possible now, as the UK government does not have to conform with all EU guidelines and policies. It can make the changes it wants to make, if it really wants to make them. Unfortunately, that didn't happen. There were no earth-shattering changes. However, there were a number of measures and announcements that will impact on some businesses and some sectors. The headline news from a VAT point of view is that there was no change to the VAT registration or deregistration limits. That was unfortunate and a shame. SMEs annually hope that the VAT registration limit may change, ideally increase, so that smaller businesses don't have to have an obligatory cost of administration and lose out on some income from sales. It also means that with a higher registration limit, businesses could opt or elect to register if it really benefited them. However, there was no change. And similarly, there was no change to VAT rates and no significant change to any VAT procedures. So what was announced? The government announced that they will extend the VAT exemption on healthcare to include medical services carried out by staff directly supervised by registered pharmacists. Now, this simplification is going to take effect from the 1st of May 2023, and it's going to ensure that the VAT system keeps up with changes to how the NHS is operating and is in line with the government's commitment to ease pressure on GPs. They also announced that the government's going to extend zero rate on prescriptions to medicine supplied through patient group directions. This change is going to reduce costs for the NHS and ensure the tax system keeps pace with healthcare delivery. Again, it's in line with the government's commitment to ease pressure on GP services. The next two areas cover financial services. Following a consultation on the proposed reform of fund management rules, where they were trying to improve legal clarity and certainty, the government is considering the responses and is going to continue to discuss the proposals with interested stakeholders. The government intends to publish its response to the consultation in the coming months. Turning to the wider position of financial services and VAT, building on the recommendations of industry working groups established to consider the future of VAT and financial services, the government is going to continue working with stakeholders and consider possible reforms to simplify the complex VAT treatment of financial services and attempt to reduce inconsistencies. Again, this is hoped that it's going to provide clarity and certainty for businesses in that sector. The next area of change is linked to energy-saving materials. The government's published a call for evidence on options to reform the VAT relief for installation of energy-saving materials in the UK. The call for evidence will consider the inclusion of additional technologies and the possible extension of the relief to include buildings used solely for a relevant charitable purpose. We strongly recommend that anybody in that sector or anybody interested in that sector looks at the evidence for options and contributes where they think it's appropriate. And the second area in this slide is the deposit return schemes. And the government have announced that they're going to simplify the VAT treatment of deposits charged under the deposit return scheme for drinks containers. This is intended to ensure that where a deposit is charged on a drink within the scope of the scheme and the container is returned for recycling, VAT won't be applied to the deposit amount. However, if the container is not returned for recycling, HMRC will collect the VAT on the unredeemed deposit. Finally, on VAT, the DIY house builder scheme. The government's going to digitise the DIY house builder scheme and extend the time limit for making claims from 3 to 6 months. These measures are hoped to improve the overall customer experience and ultimately reduce administrative burden for HMRC and claimants. Moving on to customs duty, two areas where we're covered: fuel duty and alcohol duty. However, it's worth mentioning that there are a number of planned procedural changes over the next 12 months, procedures that will affect imports and exports. Now, those affected should already be aware of these changes, but if you're not, or if you want to double check your position, please get in contact with us. But the two measures announced in the budget related to fuel duty and alcohol duty. The fuel duty point was that the cut-in rates, which were announced in the spring statement, are going to be extended for another 12 months. And as far as alcohol duty is concerned, it was previously announced that the government's going to legislate in the spring bill for a new structure for alcohol duty. And this is going to be based on the principle of taxation by strength and include two new reliefs. The duty rates under the revised structure are going to be on all alcoholic products produced in or imported into the UK, and they will ultimately be increased in line with the retail price index. A new draft relief is increased from 5% to 9.2% for qualifying beer and cider, and 20% and the rates from 20% to 23% for qualifying wine, spirits-based and other fermented products. Now, these changes are going to take effect from the 1st of August 2023. So again, anybody involved in this sector should be looking at the position and evaluating their financial model. That brings me to the end of this update. Thank you very much for listening. If you've got any questions or you would like to discuss how any of the changes affect your business, or you require more detail, more practical information on the changes, please contact us. You can use your normal Azets contact or get in touch with me directly. Thank you again, and goodbye.